Do you know how mortgage rates are calculated? This is Rob Hale with Elite Results Realty, and I'd like to discuss how it is that we come up with the mortgage interest rates. In today's market, the mortgage rates are not determined by the Fed funds rate. Many times people will take a look at the Fed rate and ask the question, all right, so if the Fed rate is close to zero, does that mean that mortgage rates are going to get close to zero? The answer is that the mortgage rates don't actually are not calculated based on the Fed funds rate. They more closely are aligned with the 10-year Treasury yield. So if you take a look at the past history of the 10-year Treasury, that tends to be about 2% lower than what mortgage rates are. So back in 2007, when we were looking at the market crashing, and mortgage rates at that time were about 6.5%, 7%, and the 10-year Treasury yield was about 4.5% or 5%, so about 2% higher. It took a couple of years for the Fed to step in and start buying the Treasury bonds, which caused the rates to go down, which in turn brought mortgage rates down. What happened with the current recession that we're looking at is the Fed has already been purchasing these 10-year Treasury bonds. What happens with that is it's driven the price down to a number that we haven't seen in past history, which is less than 1%. So typically, being close to 0.5% on the 10-year Treasury yield, if we add 2% to that, that would mean that mortgage rates would be close to 2.5%. Right now we're closer to 3.5%, and part of that reason is due to the fact that mortgage standards are making it so that the people or companies that buy the mortgages are not purchasing them because of these strict criteria that it takes to purchase those. So is it something that the mortgage rates could go down to 2.5%? It's possible. You'll want to talk to Nathan Jensen with Waterstone Mortgage to get the latest rates and what's happening there. But as of right now, rates tend to be holding close to this 3.5% mark, which is close to the lowest mark that we've seen in history. So again, we're going to continue to watch what happens there. But if you watch that 10-year Treasury yield, you'll have a good idea, adding on about 2% of what historically bases the mortgage rate. So if you do have any questions about where mortgage interest rates are or your particular situation of buying and selling, feel free to reach out to me, Rob Hale, at the contact information below, and I hope you have a great day.
Hey there, Nathan with Waterstone Mortgage. Hope you're doing well. So one thing to think about when looking for a good mortgage lender is you always want to know that you're working with somebody that you can trust and that they can close on time. Just about every mortgage lender can get the same rates these days. We have all the information about what other lenders offer, and we're always good about meeting or beating what other lenders offer for the rate. But the way we work at Waterstone Mortgage is we are owned by a bank, which means that we have plenty of liquidity and we have the resources to be able to close on time. And we also can shop the rate for you because we're correspondent with other major banks such as Chase, Wells Fargo, Bank of America, and we look at their rates and take whatever the best rate is they're offering and use it for our own rate. But we're still able to give you the best service because we process, underwrite, and fund the loan ourselves. So please be sure to always check with us. I've worked with Rob and his team for years, and the main reason is because they know and trust us, and they know that we'll take care of their clients and we have their best interest in mind. If you have any questions about mortgages or getting qualified for a mortgage, please contact me at the information below. I'm always available by email, phone, or text anytime.